Good evening, ladies and gentlemen. My name is Christian. I lead the Centre for Social Justice. Thank you so much for being with us tonight. The CSJ was founded to put the most disadvantaged people centre stage in British politics and to work across the political divide to try and find a way of building consensus to do that. And 2 years ago, I set our team 2 challenges. One was to produce some big ideas ahead of the election in 2015, all about social justice and transformation of people's lives. And the second challenge was to act as a platform for those aspiring to government after the election to come and debate our ideas and to share their own ideas and put them before people such as yourselves who know a lot about these topics. And tonight, I suppose that is our hope, that is what we're doing. There are reports downstairs that we have published in relation to serious personal debt, and some of those ideas are already gaining traction. The Treasury is looking seriously at what we've said about credit unions and community banking. The Liberal Democrats have looked at DROs and some important changes there, so we can be proud of some of that work. But also, of course, this is a superb lineup. Now, with all the debate about leadership elections, you may worry that I've empty chaired the Labour Party and the Conservative Party. We haven't. They've agreed to come. There was no request for more minor parties to be on stage either, so we're ready to go. But Stella and Andrew will be here shortly. But it's about bringing together political heavyweights to come and have a conversation. I'm actually grateful that the 3 parties are willing to share a stage and have a constructive dialogue tonight. That sometimes is a rare thing around to an election. We know, as we think about debt tonight, that there is, of course, productive and healthy debt. Debt that you might borrow to get on. Welcome, Andrew. Debt that might be about a mortgage or a loan for a car that gets you that job, or a loan for a business. Good and healthy debt. But we've also seen for a decade now at the CSJ the other side of debt. Debt that can leave people very stuck, struggling with mental health difficulties. Debt that might affect physical health. Debt that is unmanageable, that children live under the strain of, that parents feel the pressure for. I sat opposite a man last year, saddled with lots of debt, and you could see the strain in his face was clear. And what I want to do tonight is to have a discussion with the main parties about what it might be that public policy can do to bring help and transformation. Almost 9 million people over indebted. Household debt doubled in a decade, now 1.4 trillion. 8 million people with no savings. A payday loan market exploded. Some real progress under this government, but I'm sure even this government would admit a great deal more to do for people struggling with severe personal debt. And so anyone hoping to get into office in May needs a plan. Needs a plan for how they might support people who need that bit of help to get free from their debts. And so tonight, I hope we'll have a constructive conversation. I'm really grateful to you, Fraser, for sharing this, the editor of The Spectator, writes in The Telegraph, of course, and is a fantastic advisor to the CSJ. And again, to our panel, who have agreed to be with us, thank you very much. So please join me in handing over to Fraser and welcoming our panel.
Thank you, Christian. One of the many reasons I'm really pleased to be involved with the CSJ is that us journalists are always trying to find out what's happening in Britain, and this isn't always the same as what politicians are talking about. And the CSJ has been brilliant at finding problems and putting them at the centre stage of debate, and then politicians start to talk about it. So it's good at starting discussions, and also things that are pretty unfashionable and boring topics are regarded as such, but certainly not if you're one of the people that are captured in these problems. And in 2007, the CSJ identified 5 pathways to poverty. It's a fascinating way of seeing poverty, which has stuck with me. The first is family breakdown, the second, educational failure, the third is worklessness, the fourth is addiction, and the fifth is serious personal debt. And of course, this has become even more of an issue when there's easier access to credit, when there's a mature, rather aggressive consumer lending market, and an erosion of the savings culture that we've seen over the last few years. It's also something that's been made worse by the crash. Interest rates being knocked to the floor means that savings, what was already not enough intended to save, has been removed almost entirely. Right now, 40% of the public struggle to make it to payday. And of those, a third say that the interest on debt is the main problem. Now, the economy is recovering, but wages are not. That's why so many people look to personal loan companies to try to make it until payday. It's something which doesn't crop up very much on the official warning signs of the economy. It's something which many here in this room know is a huge issue amongst the communities worst affected by personal debt. So we've got a brilliant panel here to discuss this ahead of the next general election. And no matter who wins, personal debt is going to be an issue which is only going to, I think, grow in importance and severity over the next 5 years. If we're going to, right now the money markets think we're going to have something like 30 to 40 years of negative real interest rates. It's difficult to imagine this sort of scale of the monetary change that we're falling into, away from savings towards debt. And at a time where there will be never more ingenious ways of lending that money to somebody who really is desperate and needs it and won't look too hard at the rates of interest. Now, as I know, not these debates don't happen without the sponsors, so I'd like to thank our sponsors, Step Change and R3, and I'd like to invite them to come and amaze you with their succinctness and brevity, short but impactful message about how they see this. So first I'd like to invite Mike O'Connor from Step Change and then Stuart Frith from R3.
Thank you, it's great to see all of you here. Debt is an issue for most governments. The new Greek government has argued that it's unrealistic to expect Greece to repay their debt, and this notion may spread to other heavily indebted countries. Here in the UK, there's a consensus about the need to pay down our deficit and our national debt. How quickly we do so and how we do it will be an issue at the general election. The debate we want to have tonight is not about that, it's what we do about personal debt, although I would argue that personal problem debt is not just a problem for individuals, it's a problem for the wider economy. And I agree with Christian when he says that debt is not always a problem. Borrowing is an intrinsic part of our economic system. Many of us on low and higher incomes manage debt quite well. Personal debt now stands at £169 billion and is growing at the fastest rate since 2006. But for too many people, as Fraser said, debt is becoming a problem. Last year, 600,000 people came to Step Change at charity for help, 20% more than the year before. Most people who come to us in debt are not in debt because of foolishness or fecklessness, but because of an income or cost shock, such as an anticipated bill, or losing their job, relationship breakdown, or illness. So we're the biggest debt charity in the UK, 1,200 staff, and last year we supported our clients in repaying £360 million of their debt. However, the demand out there is much greater than we can cope with. We believe there are 3 million people in serious problem debt in the UK. We help people because getting people back on their feet is a good thing to do. But in helping people get back on their feet, we're also helping the wider society and economy. Problem debt is a brake on people's capacity, a brake on their aspirations, a drag on the economy, and a burden on our public services. Problem debt affects our relationships, our productivity of work, and even our ability to get and hold down a job. The Bank of England has pointed out that large consumer debts were a barrier to economic recovery after the crash of 2008. We commissioned Baker Tilly to carry out some research on what does debt cost society as a whole. They came up with what I think is a conservative figure of £8.3 billion. That includes £2.3 billion in job losses and lower productivity at work as people struggle with their debts. £2 billion the cost of rehousing people who lose their home as a result of debt or eviction. £1 billion in mental health care costs. But why the people can't cope with debt? It's actually a complex question, but there are some reasons. And the lack of financial resilience is central. 13 million people don't have savings to last 1 month if their income dropped by a quarter. Only a third of households cope with the change in their finances by cutting back on costs. So people are living on the edge. Sadly, too many people are relying on credit as a safety net because they don't feel there's any other way of coping. All too often, credit is the opposite of a safety net, it's a trap. Once started in that course, people find that they borrow to keep up with bills, they borrow to keep up with credit. Their options of reasonably priced credit dwindling each month. It can take years for people to get back on their feet. So with problem debt costing £8.3 billion, we're saying to the next government, whoever they may be, that personal debt is something which needs tackled. We published an action plan asking for people, the government to do 5 things, or a number of things. One is we need a low-income savings policy. Secondly, the government needs to take more action to ensure affordable credit products for low-income families. Thirdly, we need a new right to protection when people are in financial difficulty. Fourthly, we need funding for debt advice. Fifthly, we need to protect children from the harm of problem debt. And finally, and I'm sure our 3 will agree, we need to bring our insolvency solutions up to date for the 21st century. So if I can just focus briefly on 3 of them, savings. We have some of the lowest savings rates in the European Union. We need to do more to become financially resilient. So we believe that we should build short-term savings into the pensions auto-enrollment framework. Saving for tomorrow is never easy when you've got lots of pressures in your budget. We are incentivized by tax incentives to save. And the more you earn, the more generous these incentives are, ISAs and pensions. I get subsidised a lot to save. But one of the reasons low-income families aren't saving enough is because the incentives contained in the main savings policies just aren't relevant to them. Often relief from tax doesn't mean much if you don't pay much tax or any tax in the first place. So our proposal is the first £1,000 saved through pension savings would go into a rainy day savings pot. Once this threshold is reached, all pension savings would revert back to the longer-term pension savings. So using the Nest infrastructure, the savings pot would be transportable between employers and people would hold on to if they fell out of work. So if we build on the success, and let's congratulate government for their success with the auto-enrollment savings scheme, government employer pension can match the savings and incentivize people to save. Secondly, credit. People will always need credit. We need to improve credit products available to low-income families so they do not rely on high-cost forms of credit like credit loans. Successive governments have dabbled in ensuring low-cost loans are available to people who need them through building capacity in credit unions, looking at affordable lending portals, the social fund, local welfare assistance, even the help to buy mortgage guarantee. But despite these efforts, the payday lending market grew to be worth £2.8 billion. So families need a sustainable, large-scale, mainstream offer of super credit products for their needs. So we think the next government should look at the kind of products that would be sustainable for low-income households, the scale of need for different kinds of products and the extent to which those needs are being met. The best way the government can plug the gap in lending capacity for different types of products. So the final thing which I think we need to do is to give more help to people in problem debt. People with debt problem need a guarantee of help if they do the responsible thing and seek help and commit to paying their debts back. So we're calling for an extended breathing space guarantee, a new statutory protection against interest charges, collection and enforcement action when people get help with their finances to repay their debts. This would entail a budget assessment through debt advice. People would sign up to an affordable debt repayment scheme, and when that happens, they would get statutory protection, interest charges, and enforcement action, and they'd be in a better place to get back on their feet. There is such a scheme in existence in Scotland. It's called the Debt Arrangement Scheme, and our clients in Scotland tell us that if such protection, our clients in the rest of the country tell us that if such protection existed in England and Wales, it would have encouraged them to seek debt advice earlier and make them less likely to use more affordable credit as a way of coping and less likely to suffer the stress to drive much of the harm debt causes. So it's an obvious low-cost, high-impact solution. Gives people control, rewards responsibility, saves creditors the costs of pursuit and collection, and gets them a predictable way of repayment. So we believe these policies could save £8.3 billion a year. But they also send a message to 3 million people who are out there in problem debt now, and the 15 million people who are showing signs of potential financial difficulty. It says, if you do the responsible thing, if you address your debts, there is a reward, and we will work with you to help you get back on your feet. This is the time of the electoral cycle when everybody's asking governments to do 1,000 things, but our plea tonight is, when you set out the manifesto, think about what good you can do for the economy, for society as a whole, for families, for social cohesion, financial inclusion, if you make tackling personal debt one of your objectives.
Well, thank you very much indeed, Fraser, and it's my great pleasure on behalf of R3 to add our welcome to you all to this excellent event. I'm the chair of the R3 Personal Insolvency Committee and also a solicitor and a partner in Stevenson Harwood here in London. And we're delighted to be partnering with CSJ and Step Change this evening. We're particularly delighted to have such a distinguished chair and panel for this very topical event during Debt Awareness Week. R3 is the trade body for the UK insolvency profession. Our members work both in corporate and individual insolvency situations, and of course it's the personal side that we're here tonight to debate. And on the subject of the debate about the rising cost of living and the pressures facing those living at the edge of their means has been well documented and no doubt will feature quite significantly over the course of the next 100 days. However, we are concerned about the fact that less attention is being given to what happens to those who fall into insolvency and the dramatic increase in the number of people struggling with their debts is a problem, and it is real and it is present. In the last 10 years it's increased dramatically, and just by way of example, in 2003 the number of people entering into personal insolvency was 35,600, and now, and 10 years later, it went up to over 102,000, almost a threefold increase. It started to fall, but R3 has been campaigning for some time for a review of the personal insolvency landscape. The legal regime with which it operates has developed in a fragmented way over the last 30 years and since 1986, when the Act came into force. And as such, it's not kept up with this dramatic change. And there's debtors entering into inappropriate procedures and creditors unable to get their money back. We do welcome the announcement made 2 weeks ago concerning the entry levels into personal bankruptcy up to a level which is significantly increased on the level which was originally set in 1986. But there's much to do. I look forward to hearing the panel's views on personal insolvency and how we secure a balance between ensuring that debtors can access the right personal insolvency solution and creditors will not be exposed to debtors who rack up debts which they can't afford. Our invitation to you is to give us your views. We're very grateful that you've accepted. And now over to you, Fraser, to help you deliver. Thank you very much.
Thank you. Well, it's also over to me, but now over to our panellists. I'm delighted to have 3 brilliant voices from each of the, can I say main 3 political parties? I don't know. 3 of the many political parties contesting the next general election. On the far left, Andrew Leveson from the Treasury, who is overseeing credit union reform. And then Stella Creasy, who is won a Spectator Award, there's no higher accolade, for her work. No, it's the sort of thing you retire on. For her work campaigning against payday lenders and for greater restrictions on them. And it's an interesting example of how actually, if you're good enough at politics, you can achieve things from opposition. You don't have to wait until you get into government. And on my right then, Lord Kirkwood, who sits on the Financial Inclusion Commission, Liberal Democrats, and is taking evidence on personal debt, which I'm sure you guys know is going to report in about a month, is it? Okay, we'll see.
Thank you, Fraser. Fraser is my favourite journalist because he's, in 40 years, he is the only person of the journalistic clientele who took the trouble to phone up and check a fact with me before he published it.
I'm sorry about that. Don't tell anybody. I'll give you kicks out of journalism.
Very well, no, but I appreciated it. Anyway, and I'm very pleased to be here. Thanks to our sponsors, and I'm pleased that they got their say in early, because I think that they set the scene, and some of these ideas that they have suggested, I think, will commend themselves to all political parties, and I hope they do in the next 100 days and beyond. I do want to start by saying I don't really come from the same political side of the party as the Centre for Social Justice. But I do want to say, as a Liberal Democrat, the importance of other people's point of views is critically essential to the development of public thought and public policy. And I want to pay I've never had a chance to do this before. I want to pay a very sincere tribute to the work that the Centre for Social Justice do, not least around the work that produced Universal Credit, which I think in time, inshallah, in time, will be a significant asset to the welfare structures in the United Kingdom. So I'm pleased to be here, and credit to the people who have done the report and our sponsors. In 5 minutes, all I'm going to be able to do is sketch in some ideas and then leave you with 4 thoughts. First is that I absolutely agree, and I actually confess that people maybe on my side of the football park in the past have been too obsessed by merely cash transfer solutions to some of these problems. And certainly when I was chairman of the Social Security Select Committee for 2 terms in the Commons, that was my focus. I believed that money was the platform on which you could help trade households out of these kind of debt-type problems. And I have changed my mind as a result of the recent experience working with the Financial Inclusion Commission. And I now think that debt and the attendant insecurity is now a premier policy problem within the United Kingdom, and I think it's something that none of the major parties can ignore for any longer. The context is that I think in the recent past the coalition government has been fighting on other fronts, and in spite of that I think that they've made some progress with the basic bank accounts and the viable work that's been done by colleagues about the credit union programme, which I think are all helpful in their way. But the more I think about it, the more I think that there is a gap that has been left and was left after the demise of the Financial Inclusion Task Force. I mean, I think if you look back the way we had been doing the Financial Inclusion Commission, I think you can see the drop-off in the momentum, the political momentum after 2009-2010 when Brian Palmer's work was completed. Because remember, he was Treasury-based, so he was sitting right in the centre of the park in terms of the political approach to the thing. He had a modest budget, 120 million over 3 years, and that money was spent keeping the research flow going, keeping the pressure groups, keeping everybody informed, and the debate on the move. And one of the things I think is obvious when you look back on that is that there is now a gap that's been left by the demise of the Financial Inclusion Commission, and I think that that's something that we need to recognise. Looking forward, I don't think that we are short of difficulties, and Fraser talked about some of them. I think austerity is going to be with us. I agree about that. I agree with a lot of the stuff that he writes in his columns about the prospects for the economy in the future, and it's intelligent and it's helpful. Although it doesn't solve any of the problems, it certainly crystallises the analysis. I think that there are, and people sometimes forget this, there's going to be a digital challenge both ways in terms of there's a digital exclusion problem as the economy and as our society gets more digitally focused on the back of internet development. But I also think that there is going to be a knock-on effect, a negative knock-on effect on labour market futures in terms of the increase in artificial intelligence. And I just considering the House of Lords Select Committee looking at that, and I think that unemployment is bound to increase in the short term. There will, of course, be attendant increases in employment because of the job opportunities, but I think for the digitally and the financially excluded, I think the problem gets compounded. So I think that we've got to keep our eyes focused carefully on what's happening in that domain. I think universal credit delivery is a massive problem in the short term in terms of making sure that the single monthly payment that is part of the roll-on scheme at the moment is not an additional problem for people who are financially challenged already, and we need to think about that very carefully because it will affect some 2.5 million people at the last count. And I think pension flexibility that was mentioned earlier is also a problem. So looking forward, the difficulties are hard to identify and things are likely to get worse before they get better. So in my way of thinking, and this is not official Liberal Democrat policy because I don't think it exists, so I'm not able to find it. If you knows anything about it, maybe you'll let me know. We need some new customised products which are much more tailored to the real needs of the two lower deciles of our household income distribution. And those are in the areas of insurance, because there's a huge gap there, in banking and access to credit, and as has been said earlier as well, debt resolution. And I think that we must stop thinking about trying to shoehorn systems that work for me and you, and people in this room, and trying to apply them with minor tweaks to a cohort of our society who live on a weekly cash basis. And people who think that they are not clever about money are wrong, because they're much cleverer probably than most of the people in this room, because they've got less money to work with. What they're struggling against is a system that is designed for something completely different. And in my experience, there are other models available in sister European countries which do this much better, based on internet and digital kind of systems, which are much less costly to run, but more appropriate to the actual circumstances we can from the households it seeks to serve. A couple of other quick things just to put the table as far as I'm concerned. We need early years, early days intervention at primary school and for adults. So education is an important part of that. I don't think there will be many people who disagree with that. We need as well a framework of fee-free money advice can be delivered through the third sector, I think, most effectively. And a lot of that can come off the back of the local social welfare framework that's being built around universal credit rollout, because coaching will be a part of that. So there's an opportunity there with contact already established with the public for real purposes in real time to get access to them and deploy some of the education that I think is needed. And finally, really more than anything else, and this isn't easy politically, I can tell you, because the political parties will not, the political strategists, the Lynn Crosby's of this world, will not going to focus on this client group at all. So part of the argument, part of the difficulty we're going to have is to try and make sure that somehow in the next 100 days we get into the manifestos and the minds of the politicians who are framing the debate. I would go as far as to say that, speaking for myself, I would not recommend that anybody in the United Kingdom should vote for any political party that doesn't have a serious reference which recognises the significance of financial inclusion. I would settle actually just for those two words in that order, anywhere, at the front, the back, or the middle. But they've got to signal that they understand, a bit like the scales have fallen from my eyes. The three major political parties, I think, are all facing a challenge if they don't recognise the significance of financial inclusion. I think, for myself, you were my fairy godmother who gave me a wish. I would want a treasury-based minister who is prepared to put his or her career on the line in the next parliament to lead the charge on this important subject area. It can be done. There are we've got a lot of bright talent in the existing House of Commons, and we'll get some new ministers, whoever is forming the government. I think more than anything else, somebody who's prepared to drive, and I really mean drive, the agenda, situated, brigaded in the Treasury, would be a major, major asset. And all these other, the second order but important policy points can be then taken forward. For me, that would be the most significant thing. Free money advice service and a task force that looked something like the Brian Pomeroy financial inclusion task force in 2005. And finally, and this is a bit of an obsession with me, I think that we should be using big data and digital systems a lot more cleverly to anticipate people who are at risk of getting into financial exclusion and serious debt. I've been looking at some of the work that Francis Morton is doing in the GDS, and if we can get access, we've got to be careful about privacy and all the rest of our core civil liberties. But I think that we can be much more intelligent about how we use data to identify people. And then, for example, you could access help for them through the, unfortunately, Troubled Families Programme. It's a very good programme, it's a very bad name, and offer help early. So that helps reduce the stigma for people who don't like to come forward and confess that they are in financial trouble, because nobody wants to offer themselves up to do that. So I think there's a big agenda. I think the politics are really quite hard. I think because none of this client group votes much, the Lynn Crosbys and the other political strategists are not going to be paying as much attention to them as perhaps we would like. But it's our job in the next 100 days to try and put that right. Thank you very much for your interest.
Well, I'm trying not to be deeply offended by obviously being found wanting by Lord Kirkwood. But what I can tell you is that financial inclusion is a completely top priority for me. And I absolutely do not agree with him that because it's not a buzzword for a political strategy that therefore politicians won't be focused on it. That could not be further from the truth, and I can assure you that I spend a great deal of my time focused on financial inclusion. One thing I do, however, completely agree with him on, and that is that financial problems come in all shapes and sizes, ranging from financial exclusion for people who are completely unbanked with no access to finance at all, to people who, as our sponsor pointed out this evening, have business problems. So they get into insolvency and debts that way. And then you have people who get divorced, they get into problems with child support and so on. So it comes in all shapes and sizes, and it's incredibly important to remember that. So one size doesn't fit all. There isn't a solution that you can just wave a magic wand and it's all fine again. It requires a strategy for financial inclusion. And I hope to sort of give you a bit of what we have done, and also to give you a few thoughts on what I think we should do. So there have been a lot of numbers bandied about the people who are in financial problems. My figures say about 9 million people, and another 8 million at risk of financial problems. So actually an enormous problem, it is quite true to say. And of course, as has been pointed out, debt is often linked to a range of other problems such as family breakdown, homelessness, mental illness, physical illness, alcohol and drug dependency. As I say, it comes in all shapes and sizes. So policies have to be a mixture of prevention and cure. Prevention, which is to make sure people have the education and, really importantly, the right financial products to stop them getting into serious debt in the first place. And then secondly, cure, to help people have the support they need if they do get into a mess to get their finances back in order. So the government has taken action in 4 key areas. First of all, we're boosting education. So in September 2014, we made financial literacy a compulsory part of the national curriculum. So 11 to 16-year-olds can learn about the importance of budgeting, sound management of money, credit and debt, as well as understanding different financial products. That's really vital. There's a lot of research that shows that actually children have formed financial habits as young as the age of 7. And certainly in my own household, I had a very brutal regime of rewarding with pocket money for tidying your room and making your bed. And as soon as they got their pocket money, I taxed them on it and invited them to make a charitable donation to a charity of their choice. So I was perhaps a little bit brutal, but anybody who wants the template, see me after. So very importantly, for younger children, we're supporting the Archbishop of Canterbury's task group on affordable credit and savings by getting involved with paying for the pilot called the Lifesavers Project. This will teach primary school children about the benefits of saving, and it will introduce them to credit unions very young. Really valuable project, and if it's a success with the pilot, they'll be looking to roll it out nationally. So secondly, we're making sure people have the right financial products available. One of the biggest problems we've seen in recent years is people going a bit overdrawn and then getting charged up to £35 for being a bit overdrawn. They struggle to pay the charges, so they get a bit more overdrawn, and then they have further charges. And many people have effectively been locked out of their own bank account because they can't pay back the charges. So to put a stop to this, last December we achieved a pretty landmark deal with the banks, covering 90% of the UK current account market, where they've agreed to provide basic bank accounts to anyone who doesn't already have a bank account, or importantly, who can't use their existing account because they've got themselves into financial difficulty. And for the first time, these accounts will be totally fee-free. So they'll prevent people from going overdrawn and from being able to rack up charges that get them from. So they'll be basic transactional accounts. And of course, we're promoting credit unions and other mutuals as a way to give access to credit and savings facilities for the financially excluded. We've consulted recently with the credit union sector on what more we can do to support them. And we've got a lot of ideas now for further legislative reforms in the next Parliament. But as has been mentioned, the credit unions have a £38 million fund to expand. The more advanced credit unions have the opportunity to expand their activities. Some of them, I'm delighted to say, we've visited a number of them, some of them are already competing with payday lenders by offering short-term, higher-cost credit facilities to their members. And that's a good thing. They're filling the space for people who aren't necessarily insolvent, but who can't make ends meet at the end of the month. So this is all part of our wider policy of promoting competition and choice in the banking sector, trying to make sure that new and smaller banks can enter the market, challenging the existing offers, making it easier for people to switch between banks, and giving them the services they need. And specifically on universal credit, to address one point that Lord Kirkwood raised, there will be specific support for people who are struggling once they get this monthly payment under universal credit. If they can't cope with their finances, there will be coaching and guidance for them. And of course, their rent can be paid direct to their landlord if necessary. This isn't some attempt to put people into worse financial position, but merely to give them the chance to get onto the path to creating a better life for themselves. And that's what all of our changes and policies are designed to do, is to get people onto a better path and not leave them languishing in poverty, in financial exclusion, and in reliance on the welfare state. So third, we're making sure that free and impartial advice on dealing with debt is easily available. Through the Money Advice Service, we've put funding for debt advice on a sustainable footing. MAS provided 38.1 million of funding for free debt advice this financial year, commissioning people like Step Change to provide that absolutely vital advice to people in debt. And we've commissioned an independent review to be published shortly to make sure that MAS is operating as efficiently and effectively as possible. And then fourthly, as is well known, we've radically reformed regulation of the consumer credit market, including of debt management firms, to make sure that consumers have the right options available for dealing with their debts. So in April last year, responsibility for the debt management sector transferred from the Office of Fair Trading to the Financial Conduct Authority. The FCA has brought in tough new rules, including making the debt management sector signpost customers to free debt advice, and we've equipped them with new powers to punish breaches of the rules. And there is a transition period underway now where DMOs are being forced to apply to have new licences under the FCA regime, so there is an opportunity to carve out some of the worst culprits in the for-profit sector of the debt management sector. And we've also passed legislation giving the FCA a duty to cap the total cost of payday loans. This cap came into force on the 2nd of January, protecting customers from unfair and sometimes exorbitant costs. So there is absolutely no room for complacency. There's a huge amount still to be done. Just today, for example, I co-hosted with Vince Cable in Biz a roundtable with people from the banking sector, from the debt advice sector, the consumer choice sector, and also charity sector, to talk about financial inclusion, what more the banks can do, particularly for people who are rural poor, where the bank branches have closed down, what can be done through the post office network, and what more banks can do to ensure that they can use technology to give people access to finance. And a final note on technology, which of course does offer enormous opportunity to be part of the solution. The old prospect of being on a mobile phone, as you often are if you're not well off and you don't have a landline or perhaps somewhere to have a landline, and you're waiting for ages on the phone to a call centre, and in the end you give up or you're told you wrongly dialed and try another number. The days of mobile payments will radically transform the ability of people who aren't so well off and who don't have the ability to go through complicated loops to do transactions quickly, efficiently and cheaply, if not free. So I do think that even at that very basic level, not to mention smart ATMs where you can pay in cash, take out cash, do transfers and so on, those are all coming, and I'm certainly pushing that as the Minister responsible for the city. And I can absolutely assure you that it is a top priority for me, not just for now, but also for the next Parliament. Thank you.
Yes. I can now see why the Conservatives are against giving 16 and 17-year-olds the right to vote. It's clearly there is some making up to be done as they get older. Thank you to the Centre for Social Justice for inviting me to be here this evening. Like Archie, perhaps we're not normal bedfellows, but I think it's really important. I'm very pleased to see personal debt being talked about and being seen as such a political priority. I think it's worth therefore talking about just quite what we're talking about in terms of personal debt, because certainly I think that the nature of personal debt in this country has changed to such an extent that actually when we talk about financial inclusion, the numbers of people potentially affected by this, and the number of people that we need to think about how we are supporting are so huge that rather than seeing it as about something that goes alongside the mainstream, for me, and certainly the argument I want to make tonight is about how we reform the mainstream to work alongside this group of people, given the state of the crisis that we're in. I think if we're honest about it, Britain has always been quite complacent about debt. We've always been much more comfortable than our European counterparts about borrowing. We have 70% of the entire credit cards in Europe in this country. There's one European league that we will actually win this year for a change. But I think it's very important to recognise that in the last 5 or 6 years, the nature of personal debt in this country has changed and changed in quite a substantial way. In particular, the change between it being about housing debt and in particular about the way in which debt secured against a property was often the biggest growth of debt, to looking at unsecured debt. And in particular, the change of that therefore means that where we had very low numbers of people in the 2000s who were struggling with debt repayment, now we're seeing millions of them. We're seeing the consequences of it. That's partly because this recession has been like no other recession. There has been a perfect storm of rising inflation, falling wages, and lax regulatory approaches to those people trying to serve this group of people. If you contrast the way in which in the 1990s the recession, the spending on essential spending was about 55% of gross income, and it then fell to 50%, that basically nobody had any money and the cost of goods was falling. If you contrast that with this recession, where we saw it rise back up to that 55%, 55% is a crisis moment for people in terms of non-discretionary spending, and it has been like that since 2009 and still remains like that crucially. So we are now seeing a country that is massively in personal debt, whether it is people who are indebted to high-cost lenders or indeed on mainstream credit, and no respite in sight. And that is why we certainly believe this has to be a political priority for the next, for this election and for many years to come. Quite what does that mean? It means that actually by the end of this decade, we will be more in debt than we were in 2008. So actually the levels of personal debt will be higher than they were in 2008. £2.6 trillion worth of debt. Indeed, when you look at the Office of Budget Responsibility figures, it's very clear that our recovery is built on that level of personal and private debt. So even though we are now in recovery, people are still borrowing because that's the way that we are in recovery. Some of the figures that really worry me is that in the last 6 months we've actually seen a doubling of the amount of credit card debt, a tripling of the amount of payday loan debt that we see in this country. So people are juggling cards not just to manage consumer spending, but basically the basic costs. And with wages still quite erratic, then it's very difficult to see respite in sight. Little wonder that R3, and I just want to pay tribute to R3, who've been fantastic about tracking some of these trends over the last couple of years, are finding that the average indebted person in Britain now is about 3 months' worth of salary. That's a huge amount of money to be in debt to on a daily basis for basic essentials. Every day we're spending £163 million on interest alone in this country. For those of us who like football, that's like buying Gareth Bale and Cristiano Ronaldo on one day. For everybody else, that's equivalent to 5,000 nurses. That is a huge amount of money to be pumping into interest. Now, I will say very clearly, it's not that debt itself is the issue, but it's the nature of debt that we see. I think it's important to recognise there is a difference in that problem when it is unsecured debt, and to recognise that there are probably two different groups within our society, therefore, that we need to think about. First of all, there are the people who are drowning, not waving, and then there are the people who are drowning and really should be waving at us. Those people who are what we call zombie debtors, and that's a phenomenon we started to see in the 1990s, but it's got a lot worse. So we've got 1 million people in this country in the last year who paid simply the interest but no capital on their credit cards. Huge numbers of people just paying off a debt that is growing and growing and growing. Half of all the people who live in our capital city struggle to make it to payday. One of the reasons that I started the payday loan campaign in Walthamstow was because I could see firsthand that people in my community there was too much month at the end of their money. That situation remains, and in some cases is getting worse, not better. Little wonder half of us are actually worried about our levels of debt. And that's a very expensive problem for us all to have. It's not just a problem for those people, because as step change research has pointed out, those people in debt to those high cost lenders are much more likely to be in debt to all of us as well, whether it's behind on their rent, on their council tax, on other bills that they have. But what's crucial about the last couple of years that we're starting to see is that it's debt repayment in of itself that is causing people to struggle. So people are caught in a spiral which has no end. And that in itself is feeding that drowning sensation for people. That's why we're seeing so many people who are swapping on their credit cards as well. And I certainly hope that the study that the FCA is doing is going to drill deeper into this issue about people swapping between credit cards and moving around debt rather than getting to grips with it. That second group of people we need to think about are the people who have no shock protection, as I call it, the people who have no savings, the 30% of us who simply would not cope if something happened to their families. The people for whom any rise in interest rates, particularly if they've got mortgages, and I see it in my community where house prices have gone up 30%, where rents are going up. And Fraser wants an example of what the Scots are doing, right? Certainly as far as I'm concerned, banning agency fees for tenants is a good start, because I see people with so much debt getting into property trying to stay in the area. They are the people for whom we need to think about what will happen when the cost of living doesn't decline but actually continues to rise, or when interest rates start to rise as a result. Those 9 million people who are already over-indebted, who are in a precarious financial position, those people for whom perhaps interest-only mortgages are going to come to fruition in the next couple of years, for whom the possibility right now of debt seems remote, but is all too obvious when you start to look at their financial makeup. For that, then, I think we need some very pragmatic ideas, because frankly, if debt isn't going to go away, this isn't about saying to people, don't borrow. This is about recognising what people are borrowing for and how we deal with it. And I think the work that Step Change has done with some very pragmatic ideas is very good as well. Firstly, for me, as the Shadow Consumer Minister, that means ending the poverty premium. It's estimated it costs families on low incomes an extra £19 a week because of the poor deals that they get, because actually they are the people most likely to get ripped off. I see it in my own community. Elderly residents who come to me to complain about the council services because they don't want to use their daytime landline phone numbers because they're worried about their phone bills, when most of us probably get free landline calls on our phone bills. The people who are getting ripped off by our energy companies, by our insurance companies, the people on the lowest incomes at all. So certainly reforming the consumer credit landscape, and I would say certainly some of the work we can do around things like My Data, will make a big difference to just that basic cost of living. But secondly, we also need to deal with what people are being offered in terms of credit. We want to see lending being lending. The issue with the payday lending companies was never the price of the credit, it was the behaviour of these companies. It was the fact they were lending to people not because they wanted them to pay back at a high rate of interest, but because they were preying on them to get them into that relationship where they would have to keep borrowing. That's why 50% of their profits were coming out of repeat borrowing. We can see those sorts of behaviours in all sorts of other types of credit as well. And I would just caution, Andrew, when we talk about an overdraft of £35, an overdraft charge, that's actually higher now than the cap that we're going to see on high-cost credit. So there's a very real question for us about some of those predatory behaviours that we see in other parts of our consumer credit landscape, where people are recognising so many people are stuck in this situation and the profits to be made from them, whether that's actually in our financial interests as a country to leave untouched. I completely agree about debt advice. I also have to say we are very concerned that it costs money in this country to be in debt. Again, we welcome the fact that the FCA is looking at the price of debt management, but we think we should move to a situation where we don't have to pay to get out of debt. And there's certainly plenty of organisations and companies who would benefit from that process. Because frankly, you can still charge 50% of the fee as an arrangement fee for a debt management fee. That's 50% of the money that the company who you're a creditor isn't getting, let alone it's massively extending the amount of time that people are in debt and the amount that they're having to pay back. So we think we certainly need to move in that situation. We recognise right now, because of the scale of the problem, we haven't got the free debt management service in there to be able to cope with the challenge that we might want to see. But we certainly think the government should be setting those sorts of ambitions. And certainly that we can see a 156% rise in the cost of living related debts that many creditors are facing, that they then have to recoup themselves. So it's in their interest to invest in that process. We'd like to see a move on credit checking. Again, I know that the FCA is looking at it, but frankly it's a bit like asking turkeys to vote for Christmas to ask these companies to do it on a voluntary basis. Because mandatory credit checking and real-time credit checking allows you to be held accountable for what you're lending to people. And it's one of the issues we saw in the high-cost credit industry. It's one of the issues we see in other parts of the credit industry, where people are lending to people and saying, well, we weren't to know that they had other sorts of debts and other sorts of issues that need to be dealt with. So we'd like to see that issue be resolved. And we also think there's much more we can do about social finance and expanding the credit union movement. I'm delighted to see Abacus here today because they've been doing some amazing work on this. One of the challenges is absolutely the types of products that credit unions are able to offer, but fundamentally we know this is about capitalising the credit union movement, about putting them on an equal footing with mainstream banking in this country. I still have 18 payday lenders in my high street. I have one credit union. It's still not a fair fight. It's still not acceptable to me that we're focused so much on credit unions lending, but not looking at what we can do to help them do better in terms of not just the debt management advice that they do, but also the work they do in supporting people who are savers. And we think there's a lot more work to be done, not just about the products that credit unions have, but actually about the interrelationship between them through things like community banking partnerships and other providers of credit in their area. To finish, I just want to say a little bit about the future if we don't tackle some of these problems. Because if you look again at the nature of the jobs market in the last couple of years and how that's changed, that brings some real harbingers of doom as well about this agenda. If we look at the rise of people in self-employment, some of it is fantastic, but for some other people, that's a rise in precariousness. Again, this isn't about judging people, it's about recognising what might come in the next 5 years. But when 1 in 7 workers in this country is now self-employed, there's clearly going to be a different way in which we do credit referencing, a different way in which we do credit checking for people that needs to recognise that and help them. Secondly, we have to recognise the way in which young people, and when I say young, I mean even my generation of people are borrowing, in particular the rise of high-cost credit and the impact on those people who will also have student debt on them. But there is a fundamentally different debt picture that we need to address amongst the under 40s in this country. We also need to recognise that this market is evolving quicker right now than any of us in the policy-making world can keep up with. Whether it is the payday lenders who now stopped doing short-term loans and started doing year-long loans, or offering to top up people's bank accounts, we can see that this market is evolving very, very quickly, so we have to be able to match it. And the final thing we need to be able to do is recognise where we have a shared interest in it. And it's not just about dealing with people in debt, it's also about what the consequences of living in debt are. Because I see some fantastic young people in my community whose families are never going to think about them getting on the housing ladder or going to university because they've got 10 to 15 grand worth of unsecured debt. So I just ask you in conclusion, when you're thinking about the personal debt picture, think about those people. Think about the talent that is going to go to waste if we don't make tackling Britain's personal debt crisis a top political priority at the next election. Thank you.
Stella, well, now remember these wee cards, you can write down questions and hand them to Joss. I'm going to encourage you to ask questions by asking very bad ones in the next couple of minutes. And you see how bad as journalists are at it, which is quite bad. Andrew, can I ask the first question to you? You say at the end, you elated on how technology is, you saw it as a force for good. Is it also not the huge advance of technology that's making these payday loans possible? You can now go online and get, a loan in seconds. So this is simply because the technology exists in a way that it didn't 15 years ago. And as far as I can see, it's technological advances. I don't know if there's a wrong app, but it probably is. And I can probably, do this and, get money sent to my account by the time I get back to my office.
You're an advertiser.
We'll see. So what isn't technology on balance more of a problem than a solution?
No, I don't think so. I mean, last year I did a a visit to India to talk to the Indian banks and regulators about what they do on financial inclusion. And they obviously have a massive segment of their billion population who are financially excluded. And what they do are e-lobbies, where you end up with a small room which you access with your PIN code. And you go in there, and there are 5 or 6 self-service branches in there from 5 or 6 different banks. And it's an ATM which enables you to do any transaction you need to do. So that, at that level, at access level, can be absolutely vital. So too can things like My Data that Stella just mentioned, which will enable you as a consumer to download a year's worth of your banking financial transactions and to look at what might have been a better deal for you. So what might have been a better energy deal, what might have been better for you to spend in terms of, you know, your coffee allowance or whatever it might be. So it gives you the chance to use your actual transactions to make your life cheaper, more successful or whatever. So obviously there's always a lead time and there's always the challenge of getting people up to speed with those things. But even things like check imaging, where you'll be able to photograph a check and pay it in that way, these things you'll get credited faster, there'll be less room for fraud and so on. So I think it's got huge potential for good, definitely.
And so, can I ask you, you've taken aim at payday loan companies, but they're incredibly conspicuous when you sit in the tube and you see Wonga, and it says at the end this equates to 5,000% or something. You know, your average commuter can think that's outrageous. But when I think of the money my bank used to charge me for going over a draw, you know, for a couple of quid a day, if I was to calculate that as 90%, it would be a complete rip-off. But the banks don't advertise it as such. So might it be that the banks are actually imposing penalties which are anything worse than what Wonga's doing, and that for a lot of people, Wonga is just simply a far cheaper, more manageable alternative to bank overdrafts?
Seriously, you are on a retainer. It's a very fair question, and certainly one, you know, Andrea, I mean, obviously in the coalition agreement, actually we started looking at capping overdraft charges and bank and store cards. Now, all the promises the government made on that were rescinded. It was because I saw that and saw that it wasn't looking at high cost credit. That's why I first started to go and see ministers in the government saying, have you seen these guys? But this is the argument I always call the, because arson happens, we shouldn't deal with burglary one. Look, there are problems with the way in which people are being lent money, not to lend the money at even a high rate of interest on the expectation that they will return that cost, but because it's about getting into a relationship with people. And the same sorts of patterns that we're seeing within some of the high-cost credit companies, we do also see some of what people call the mainstream credit. That's why I certainly hope one of the benefits of having the Financial Conduct Authority and the data that they will have about the ways in which people are being lent to will make this much clearer. Look, frankly, if you are in financial difficulty, whether your overdraft charge is £35 or £12 makes a big difference, but £12 is still a lot of money if you haven't got £12 that day to spend. And if you look at some of the credit card companies, one of the things they've done over the last couple of years is actually increase the rates that people are paying if they're classed as a risky consumer. All of these are issues about that kind of predatory behaviour. How do we make sure that people are contextually in a level where they need our type of credit and they probably wouldn't get lent to by somebody else, so we've got them captured. And actually it's not just about competition, it's also about recognising that those sorts of behaviours are not a fair fight.
Is it such a bad thing to charge more interest to people who are at higher credit risk?
No, but that's not the point. It's not that the interest rate reflects the risk of lending to those groups of people. And that's certainly what we're seeing from the Competition and Markets Authority studying into financial services that recognises in the payday lending industry alone that actually there's room for a lot more competition which could drive a lot of the prices. The payday lending cap is £1 less than these companies are currently charging. It's clearly too high. But I see it as a starting point and we'd like to see it reviewed to reflect the fact that in the next couple of years we're probably going to see more people having to borrow in this way unless we get our mainstream credit companies and our banks to recognise this is not a few people in our society, this is millions of customers who may be dragged into this. One of the most powerful studies I saw was a mainstream bank that found that 500,000 of its customers had gone to a payday lender rather than come to them for a personal loan, despite being eligible for a personal loan. This is business they're missing out on as well.
Now, Archie, as a fellow Scot, you'll be a fan of Everyone Welch's book Trainspotting. And there's a memorable line
Not my
there.
favourite read now.
Oh, it's so funny. Anyway, but when you guys have been Trainspotting, haven't you?
Yeah.
But there's a line when Renton comes down to London and he's amazed at all the amount of debt which the rich have. Yeah? And he goes back and saying, I know some junkies in Edinburgh with healthier debt-to-asset ratios than some of these twin mortgaged couples we see down here. Now, that book was written in the early 90s. Surely what's happening is democratisation of debt. It's a lot easier to to get your hands on some loans where it wasn't some 20 years ago. So a lot of the figures that we're seeing about the poor owing a lot more is simply the availability of credit, which is now available to them in a way that it simply wasn't, or only available to the rich a while ago. And so all I'm saying is it's not all bad, this high giving.
Well, I mean, I think it's the culture of indulging in credit to the extent that we do in the consumer society that we've now got force-feeds people into thinking that credit's acceptable. And I think that, as Phil was saying, I think that the game has changed in the recent past. I think that we really need to do something to test the zeitgeist, to really change the culture. It's not going to be an easy thing to do, it will take a long time, but protecting people from advertising and things of that kind are things that we should embrace a bit more aggressively. But coming back to your important point about the questions didn't improve as you went along, actually, I don't think that. The technology question, I agree with that, and I'm sorry, I wasn't. I got
a very good colleague with demand for
I really did not need to. I was talking about the future. I was not going great.
Yes, so he doesn't think you're going to be around very long.
No, but I did get a beautiful long look down in the Minster nose, which I recognise well. But I think technology. What surprises me more than anything else is that there's this market, Stella's described it, and I agree with the analysis. So there's a big market out there, and there's technology which can do really clever things, and it's done in a better way in other countries. Why don't we have competition? I mean, that's something you might be in favour of, for all I know. And say to people, well, of course it might need some underwriting, it might need some priming, it might need a little bit of help from big society. The government has to play a role holding the ring, because the bad debts from train spotting and the rest of it have to be factored in. People have to make a living, although if you do it through a social drug sector network style of thing, then you get a better way of getting to a place which actually looks at the needs of the people that are struggling most and build up a system rather than take high finance, and we're brilliant at it as a country. We are the world's leader in financial systems and the city and all of that. Well, why on earth can we apply all of that knowledge from the bottom up to provide a service that's tailored, it's bespoke, that fits week by week cash-based system? I can't understand why that market opportunity isn't realised. And if you offered with some money, we might be able to give some crowdsourcing and funding and going into business. Trying to serve this market, but on the other hand, maybe I don't know that many people would want to get a loan from the likes of you.
Well, Andrew, your government has made austerities and a watchword. One of the effects of this is local governments have had their funding reduced faster than most other departments, which has led to the increasing use of bailiffs and other slightly more imaginative collection practices. I mean, the government is also a creditor. It's not just the energy company. So what do you think the government needs to bear that in mind and sort of come up with formal ways in which it acts as a responsible creditor and protecting, protecting the vulnerable, recognising vulnerability?
Yeah, I completely agree with you, and I'm on the edge of my knowledge. I'm just desperately looking for the name. The government has actually very recently decided to address this head on, and I think it's I can't remember the term for it, but basically the government has decided that it's going to set up its own rules for debt collection around government contracts that will be very rigid in terms of protecting the consumer and so on. And so I don't genuinely know the background to that, it's not my policy area, but I know that there is a solution in sight, and of course, as I mentioned in my opening words, the debt management companies have come under the FCA, and they will be absolutely ruthless about weeding out the worst practices. So I do think that there have been problems, and I think that there is a solution at hand. Yeah.
So we've got patient.
Yeah, sorry, there was an amendment actually about bailiffs and about making sure that bailiffs have to do debt management before they went in claim and the government voted against it. It was 2.5 years ago. We could all see these problems in our local communities where all the incentives were to go and collect debt from people who actually that's going to cost us more in the long run. You don't see the kind of negotiation that you need to do. It's rather than better regulation of the bailiff industry, because now debt and debt collection is going to be such a big part of everyone's lives. We can't avoid
But
it.
it's now being regulated by the FCA, and it is a.
But it's not the regulation, it's actually about the requirements. And the churches do quite a lot of work on this about what bailiffs were required to do in terms of negotiate. Because I'm sure you must do in your community too. You get people who've got the bailiffs at their door and they've got bailiffs demanding money and they haven't had the opportunity to do a debt management plan. They simply have the debt passed on to them, and so they're getting chased very quickly.
But that has now changed. As of April last year, the regime has changed.
Down the proposals to do that.
Okay.
So.
But very often, when an amendment is tabled, the reason why it's not accepted is because there's been no consultation. And actually, very often, I mean, it's an easy accusation, and I don't know about the specific circumstances, but what I do know is that very often when you make changes, you absolutely need to consult, and not least of which with the payday lending industry, because what you don't want to do is to shut down one part of access to finance and then effectively end up with a massive illegal loan shark problem. So actually, consultation is really important. So very often, that's why government simply can't accept an amendment that's tabled at the last minute. I actually have to go, I'm afraid.
Right, okay.
We're finishing at 8:30.
Sure, yes, I know. There's so much to discuss.
Yeah, there's so much.
Well, thank you, Minister.
Yeah.
We can just keep you two for a little bit longer, can we?
Yeah,
Thank
I'm
you.
so sorry.
Okay, well, thank you.
Apologies anyway, but thank you.
Right.
Can I have been the Minister for the rest of the evening?
Well, I think it's still might want to do that.
There's a frying pan and there's a fire.
All right. Well, still might turn on you. You might find it to go as well. And she gets one. Right. I've got some.
We didn't get the opportunity to talk about the My Data project. Because the reason why the My Data project is happening is the same reason why you can't ask these companies to do these things voluntarily. There's a massive interest, commercial interest involved in people's data. So for the last 3 years, the government has been asking nicely these industries to share their data and find a way of making it accessible and portable. And how surprised it hasn't happened. They have the power to enact it, they do make it happen.
Right. Right, let's see if we work it. I will not see if let's see if we can whiz through some of these questions which you have been sending in. Lord Kirkwood, I'm reading the question here. The coalition government, we won't ask you about the democratic policy, because if I'm saying it correctly, you said there isn't one, so fair enough. It's far better than trying to pretend otherwise. Right. This government has cut the budgets of local authorities, including parts of the social fund. Fund. Well, that has got fund as well, really. Social fund. Well, you cannot have people cutting social funds, including parts of the social fund and other bodies that are providing welfare assistance. In the long term, what will replace the cut to the social fund?
Well, the government have been putting quite a lot of short-term money into things like discretionary housing payments and temporary kind of relief of that kind. I do have some concerns myself, and I'm not saying this because I said it during the welfare reform bill as it was in 2012 that if you don't provide some kind of support around particularly universal credit, then I think a lot of people are put at risk. The government are putting in a system of coaching, which we referred to earlier, and we're still waiting to see just what the colour of that is at a local level. But I think that will be necessary. But I do have concerns, I have to say, about the ability of local authorities to replace some of the public services that have been available through social fund community grants and discretionary awards of that kind that have been available in the past. But I think if the government gets evidence, I would like to think, put it this way, that if the government gets evidence as it monitors these transformational changes that people are suffering the way that I think they might, then I would like to think that we would have the sense and the functionality to be able to reflect on that. But certainly, I think that the new government, new income government, will be able to do that.
Stella, payday lending is just 2 billion out of 166 billion consumer credit. So what makes it so special? Why are capping and regulation more effective than increasing competition? And you yourself have said that the CMA needs more competition. It's competition rather than regulation, which is
Because you need to do both. This is a dangerous kind of specialist subject for me. The whole point about this industry is it wasn't acting in the way in which people, this predatory nature, it wasn't actually acting in a market. It was a free market, so actually you couldn't have the kind of competition that you want to see that would change the prices. But the way in which they were lending was capturing consumers, so that consumers couldn't actually take their customers to other companies as a result. One of the things about the ways in which these companies, where in other industries you have people with a default rate of say 40%, and yet these companies are still making £1 million a week in lending to British consumers. And regularly people would default on their loans and then 48 hours later get a phone call from these companies offering them another loan. You can see that this is very much not a free market, it's very much not a competitive product. This was about capturing people, consumers who they knew were vulnerable and getting them into a relationship where they would keep lending to them. Not everybody who took out a payday loan got into that spiral, but enough of them did, they could make those kinds of profits, and you see those kind of ratios. My point is that kind of predatory behaviour actually acts against competition. I am a competition and consumer shadow. I think both are very important. It's why I'm obsessed with the idea that actually you could make my data work. You could open up a whole new market in financial services, which certainly what's happened in Australia where they've used these consumer clubs to do that. But in order to do that, you have to understand the nature of the market that you're entering into. And one of the challenges we've had is, frankly, getting to grips with what these companies were doing. They're not just lending to people having to pay back a high rate, they were lending to people to get into that kind of relationship.
If the FCA regulation you push for, would that actually reduce competition? You let longer with rivals?
No. What it would do is change behaviour. Because actually, if as these companies are claiming that there is a group of people who can be led to, nobody's saying they wouldn't have a higher rate of interest. The thing about the cap and why you cap the cost of credit rather than the interest rate is it means at some point there's a ceiling out of which if you're lending to somebody and they're defaulting, you stop. And actually that's the thing you have to change. So it's better affordability and better behaviour within this industry. I've never said the cap on its own is enough, but certainly it's the only thing you can see from all the international examples that changes behaviour. And one of the things we've now discovered, and it's fair play to the FCA for finding this out, is we've had a lot more of these companies operating in the UK than we thought. So actually, the fact that we'll probably see some of these companies go to war isn't a bad thing in of itself. But for me, it was never about particular companies, it was about changing that kind of behaviour that you're lending to somebody to make their situation worse because they're going to have to keep coming back to you. That isn't good for consumers, it's not good for competition.
And Wonga can't let it off to Luxembourg, it's not the way it works.
Well, they can't if they want a consumer credit licence to abide by the laws in this country.
Right, so changing your domicile doesn't confers no advantage in this market, is what you're saying. Right.
Can I just add that?
When you're advising them, Fraser, just to Can I just say that the thing about the social fund, but frankly one of the things that we also need to do is deal with continuous payment authorities. Because the worry for me is that what these companies will do is time their repayments to the date when people get the universal credit in their bank account, and it'll be gone like that. So it doesn't matter how good they are at managing money, if these companies have free rein on their bank accounts in the ways that CPAs offer, that money's gone. And actually people working in the debt sector see that all the time with these companies. People find that they've been paid what people might earn, and it's all gone over the CPA.
Can I just add, there is a following up still on how Andrew's gone. I think because you're on this road campaign, I really mean that, I acknowledge the effort. It's more than payday loan, isn't it? I mean, what I wouldn't like to happen would be to frame, I know you're not suggesting this, but the debate needs to move through, including payday loans, to a much wider canvas in terms of some of the programme items that you need to put in place. I come back, I'm a former cheaper, much cheaper, you're also cheaper, but I think that the really key important things in the next parliament to get a player, an advocate, he or she who will be in a key position with the authority to drive forward change. I think whoever that is needs a budget. It doesn't need to be a huge budget, but it needs to be, well, the National Inclusion Commission is 120 million, that's 120 million euros, it needs to be a figure of that magnitude. And actually, if you could give me both of these things, I don't think I would have difficulty, and it wouldn't be that hard cross-party, actually, maybe, cross coalition or Rainbow Coalition or whatever, to get agreement on the elements of the programme, because our sponsors have laid some of that out, and that's a common sense of, I mean, anybody who looks at this intelligently in a grown-up way, outside the argument of politics, which we all know about, the programme is maybe easy, but if you've got an advocate and you've got a budget, the next 5 years, I think, could be made significantly different. We're not short 5 years.
You know, I've got time for just one last question. We're going to be old school and ask somebody to ask it. If somebody there has got a pithy question.
I was curious because I've been reading recently about how growth at the moment is so dependent on personal debt. And
you mean economic growth?
Yeah. Sorry. And so, from an individual consumer point of view, you can see the benefit, of course, and emotionally you can see the benefit, but socially there's a question that I've read about whether paying off personal debt on an individual level, if that's encouraged, if it has a wider repercussion for the economy. I just wondered what your opinion was on that.
Oh, so you mean if basically people start to sign up for debt, then this will choke off consumer demand and will choke off the recovery?
Yeah, it's preparing
In other words,
a house of cards at the moment, because actually personal debt is one of the few growth industries. And the then that has been so frequently referred to is a growing industry. The people who are coming to debt, as you've talked about, is expanding, interest is increasing, bank interest is increasing. I think bank interest annually is the same figure as the personal debt figure overall, which hasn't been referred to. So, just looking at it at that level, it's frightening. And I just wanted to know what your opinion was of how then, if there's an assault on tackling consumers and encouraging them to pay down debt, what else has to happen to counteract that?
So this is a good point. I mean, you know, we're looking at record low interest rates right now. This is not a bad thing.
But it depends on what we're talking about, the interest rates being paid on. One of the things that we see is that people often very low incomes are very good at managing what little money they have. But one of the ways in which they're managing is often paying off small debts rather than paying off maybe a higher interest debt. So there is absolutely an argument about how you help people balance the budgets that they have. And some of this for me, why I talk about some of the demand side stuff about it, is about where people are paying for stuff, where we are cross-subsidising some of the most vulnerable people in our society. No, I don't think that it's right for George Osborne to balance the books off the back of consumers rather than get to grips with some of the fundamental structural problems in our economy. And I recognise that is going to be a challenge if we win the election as well. What I'm trying to put forward is some of the practical ideas. Look, if debt is going to be this widespread, then it is not in any of our economic interests. So 50% of the money that you're paying in a debt management plan isn't going back to paying back that debt. It's not good for the creditors, it's not good for consumers. There are middlemen and women in these markets that are distorting things. Why on earth is there a lot of loans in this country? People are going to need money. Actually, what we need to do is make sure that that is affordable debt. And what it isn't right now is affordable debt. And the consequences for our economy could be traumatic, because if interest rates do start to rise, or actually people are still finding, as they are, as a London MP I'm biased, because I see the pinnacle of both, dare to use this phrase, cost of living crisis, but it is there for people. If those costs don't subside, then actually this repaying of debt in itself is going to create a new black hole in their finances, and that is going to stifle growth as well, because the economy hasn't been rebalanced in any meaningful way over the last 5 years.
I agree with you, absolutely, and who wouldn't? But unfortunately, and obviously the growth shouldn't come from that, but the point of it is. So what else are people going to put in place?
That's a question for another symposium, I think. It's a very good, but we're out of time, so thank you very much. I just think of the last question that reminds me of what Gordon Brown once said, that we cannot build a New Jerusalem on a mountain of debt. And look at that worked out for him. So thank you to our panel for a fascinating evening. I've learned huge amounts today, and I'm not working for Wonga. I'd like to assure you.
Are you sure what the social fund is?
I'm going to Google it. I like social fund better, actually. I want to make sure this government's not cutting down the social fund. So can we thank our panel and sponsors?